As the cryptocurrency market continues to evolve, Bitcoin and other digital assets are bracing for what analysts are predicting could be a monumental shift in value. A convergence of factors including inflation concerns, political maneuvers, and recent pardons of key figures in the crypto space is setting the stage for a potential price surge or a sharp decline. Recent reports indicate that Bitcoin prices have experienced a significant drop, retreating to around $80,000 after reaching highs of nearly $90,000 in the previous week. This fluctuation comes against a backdrop of rising inflation fears and U.S. President Donald Trump's renewed threats of tariffs, which have created uncertainty in both the crypto and stock markets. Additionally, a mysterious hacking incident has added to the unease among investors. Arthur Hayes, a prominent figure in the crypto trading community and co-founder of BitMEX, has speculated that the upcoming actions of the Federal Reserve could catalyze a dramatic price boom for Bitcoin in April. According to Hayes, there has been a notable shift in the tone of Federal Reserve Chair Jerome Powell, suggesting a potential pivot toward more accommodating monetary policies. There was a seminal change in Powell's tone at the last Fed board meeting, Hayes noted during a recent podcast. He believes that the Fed may soon reintroduce quantitative easing, a strategy that could bolster Bitcoin's value against the backdrop of the $36 trillion U.S. debt. At the recent Federal Open Market Committee meeting, the Fed chose to maintain interest rates, opting instead to adjust its outlook on economic growth and inflation. This decision aligns with Hayes's prediction that Powell's administration is preparing to overlook short-term inflationary pressures, paving the way for a more favorable environment for crypto investors. He emphasized that if Trump does 50% or 2%, it doesn't matter, highlighting the belief among many investors that the Fed will continue to implement policies conducive to market growth. Trump's recent tariffs targeting goods from Canada, Mexico, and China are also contributing to market volatility. However, some analysts believe that the president's softening stance on these tariffs could help stabilize Bitcoin's price. Marcus Thielen, founder of 10x Research, has pointed out that the combination of a dovish Fed and potential tariff flexibility could set the stage for Bitcoin to recover and possibly exceed its recent highs. In another significant development, Trump has granted pardons to Hayes and his fellow BitMEX co-founders Benjamin Dello and Samuel Reed, who had previously faced legal consequences for violations of the Bank Secrecy Act. These pardons have sparked discussion about the implications for regulatory oversight in the crypto industry. Dello expressed gratitude toward the president, asserting that the charges against them were unjust and politically motivated. The pardons, he argued, allow them to continue their work in the crypto space without the burden of a criminal record. While these developments are unfolding, the cryptocurrency landscape is witnessing a surge in interest and participation as seen in smaller communities around the world. In San Pedro, Argentina, for example, a significant portion of the population became involved in a cryptocurrency exchange called RainbowEx, which offered seemingly consistent returns on investments. The allure of quick profits led thousands to invest, driven by a mysterious figure known only as La China. However, as investigations revealed, the platform operated as a Ponzi scheme, ultimately leaving many residents in financial ruin. The rise and fall of RainbowEx serve as a cautionary tale about the risks associated with speculative investments in the crypto market. Despite the promise of decentralization and financial liberation that cryptocurrencies offer, the fundamental principles of market caution and regulatory oversight remain pertinent. As these events unfold, the cryptocurrency market remains at a crossroads. Factors such as potential monetary policy shifts, political developments, and grassroots movements will likely shape the landscape in the coming months. Investors and analysts alike are keeping a close watch, anticipating how these dynamics will affect Bitcoin's trajectory and the broader adoption of cryptocurrencies. The future remains uncertain, but one thing is clear: the world of digital assets is anything but static. In the ever-evolving landscape of cryptocurrency, a confluence of macroeconomic factors and political maneuvering is sending ripples through the market. As Bitcoin's price fluctuates in response to inflation concerns and the looming threat of U.S. tariffs, analysts are predicting a possible dramatic shift in the coming weeks. With an estimated $36 trillion in potential market influence from the Federal Reserve's policy changes, investors are on high alert. Bitcoin, which recently touched nearly $90,000, has seen a steep decline, retreating to around $80,000 as fears of inflation and renewed tariff threats from the Trump administration weigh heavily on market sentiment. Legendary crypto trader Arthur Hayes, co-founder of the derivatives trading platform BitMEX, suggests that the Federal Reserve's upcoming decisions may catalyze a resurgence in Bitcoin's value. There was a seminal change in Federal Reserve Chair Jerome Powell's tone at the last Fed board meeting, Hayes noted during a recent podcast, hinting at a potential pivot towards more accommodative monetary policies. The Federal Open Market Committee (FOMC) recently opted to maintain interest rates while signaling a shift in its economic outlook, downgrading growth projections while nudging up inflation estimates. In the context of a staggering $36 trillion U.S. debt, Hayes believes the Fed might be teasing a return to quantitative easing, a move that could foster a favorable environment for Bitcoin and other cryptocurrencies. If Trump does 50% or he does 2%, it doesn't matter, Hayes asserted, emphasizing that the Fed's continued support is paramount for crypto investors. As anticipation builds around the Fed's April policy meeting, concerns over President Trump's tariffs, set to impact imports from Canada, Mexico, and China, are exacerbating market volatility. The tariffs effective April 2 have already caused significant fluctuations in both stock and crypto markets. Meanwhile, 10x Research founder Marcus Thielen predicts that a combination of Trump's tariff flexibility and a dovish Fed may position Bitcoin for a rebound towards the $90,000 mark. Thielen pointed to Powell's remarks indicating a willingness to overlook short-term inflationary pressures, suggesting that the Fed's support remains intact. However, the immediate market response has been bearish, with Bitcoin down about 3% in the last 24 hours alongside significant declines in major altcoins such as XRP and BNB. CoinDesk reported over $300 million in liquidations of long positions on cryptocurrency exchanges, reflecting a broader de-risking trend among traders. This sentiment shift has been fueled by disappointing economic indicators, including declining consumer confidence and a PCE index indicating stronger than expected inflation. In the midst of this volatility, some assets are finding refuge. Gold-backed cryptocurrencies have gained traction, with market capitalizations climbing as investors seek stability amid the chaos. Tokens like PAX Gold, PAXG, and Tether Gold XAUT have seen their values rise, highlighting a shift towards safer alternatives as Bitcoin struggles to maintain its footing. As the cryptocurrency market braces itself for potential upheaval in April, the interplay between political decisions and Federal Reserve actions will likely dictate the near-term trajectory for Bitcoin and its rivals. With the stakes higher than ever, investors are keenly watching for signs of recovery or further decline in this pivotal moment for digital assets. The coming weeks will reveal whether Hayes' predictions hold true and if Bitcoin can once again capture the momentum needed to rise from its current challenges. In a surprising twist in the cryptocurrency landscape, former President Donald Trump continues to push his influence into the digital assets space with the recent announcement of a new dollar-pegged stablecoin $USD1 and the expansion of his crypto ventures. Launched by World Liberty Financial, the $USD1 stablecoin aims to stabilize the volatile world of cryptocurrencies by maintaining a 1:1 peg with the US dollar, fully backed by US Treasuries and cash equivalents. This move follows the previous release of Trump's Trump meme coin, which has experienced dramatic fluctuations in value since its inception. The launch of $USD1 marks a significant shift in Trump's relationship with cryptocurrency. Initially a skeptic, Trump has embraced the digital asset movement, positioning himself as a proponent of crypto innovation in the U.S. market. "We're offering a digital dollar stablecoin that sovereign investors and major institutions can confidently integrate into their strategies for seamless, secure cross-border transactions," stated Zach Witkoff, a co-founder of World Liberty Financial. This sentiment reflects a broader trend as stablecoins gain traction, often seen as safer alternatives for transactions compared to the more volatile cryptocurrencies like Bitcoin. The $USD1 stablecoin's introduction has come at a time when congressional support for stablecoin legislation is gaining momentum, which could facilitate easier operations for crypto companies in the U.S. This regulatory backdrop is critical as Trump seeks to solidify his standing in an industry that has become a potent political force. The former president's financial interests are also notable. Under the terms set by World Liberty Financial, Trump's company is entitled to receive 75% of the net protocol revenues after expenses, a significant potential income stream. In tandem with the stablecoin announcement, Trump's media company Trump Media and Technology Group (TMTG) is partnering with Crypto.com to launch cryptocurrency-focused exchange-traded funds (ETFs), further diversifying his crypto investments. TMTG's stock price surged following these announcements, highlighting investor interest in Trump's expanding crypto portfolio. However, the Trump meme coin, which debuted just before his inauguration, paints a contrasting picture of Trump's foray into cryptocurrency. Initially, the coin saw a meteoric rise, peaking at $69.76 per token before plummeting to around $10.22, leading to significant financial losses for investors. A recent report highlighted that a single crypto whale lost approximately $15.7 million after multiple unsuccessful trades involving the Trump coin. These fluctuations underscore the speculative nature of meme coins, which often lack intrinsic value and can result in substantial financial risk for investors. Trump's venture into cryptocurrency has not been without controversy. Critics argue that his promotion of crypto-related products while in a public office raises ethical questions. Despite a voluntary ethics agreement designed to limit his involvement in the day-to-day operations of his businesses, Trump has actively promoted his cryptocurrency ventures on social media, stating, "I love Trump, so cool. The greatest of them all." This endorsement temporarily spiked the meme coin's price, illustrating the impact of his public persona on market dynamics. As Trump's cryptocurrency ventures evolve, the impacts on both the market and his personal wealth will be closely watched. The successful implementation of $USD1 could revolutionize how stablecoins are perceived and utilized, especially among institutional investors. Meanwhile, the broader implications of Trump's active participation in the crypto space highlight the intersection of politics and digital finance, suggesting that the coming months may reveal further developments in this rapidly changing environment. With regulatory discussions intensifying and Trump's crypto empire expanding, the future of cryptocurrency in the U.S. remains uncertain yet promising. As the cryptocurrency market grapples with turbulence, Bitcoin and Ethereum are at the forefront of traders' concerns, with both assets facing significant pressure due to geopolitical and economic factors. In recent days, Bitcoin's price has experienced fluctuations, hovering around $82,000 after peaking at nearly $90,000 earlier this week. The decline can be attributed to a combination of inflation fears stemming from U.S. economic policy and looming tariff threats from President Donald Trump. A recent comment from Arthur Hayes, co-founder of the crypto derivatives exchange BitMEX, suggests that the Federal Reserve's upcoming monetary policy decisions could play a pivotal role in determining Bitcoin's trajectory in April. Hayes pointed out a notable shift in Federal Reserve Chairman Jerome Powell's tone during the latest Federal Open Market Committee meeting, where interest rates were held steady amidst a backdrop of rising inflation expectations. "There was a seminal change in Powell's tone," Hayes remarked on a recent podcast. He anticipates that the Fed may soon embrace a return to quantitative easing, a move that could provide the liquidity necessary to fuel a Bitcoin price boom. The looming $36 trillion debt burden faced by the U.S. government only adds to the urgency of such monetary policy shifts. This sentiment is echoed by Marcus Thielen, founder of 10x Research, who posits that the combination of a potential easing of tariffs and a more dovish Federal Reserve could set the stage for Bitcoin's recovery. Bitcoin is attempting to form a bottom, supported by Trump's recent shift toward flexibility on the upcoming April 2 reciprocal tariffs, Thielen explained. He further noted that Powell's inclination to look past short-term inflationary pressures may lay the groundwork for future easing, which could bolster stock and cryptocurrency markets alike. While Bitcoin is attempting to stabilize, Ethereum is facing its own set of challenges. A notable Ethereum investor, often referred to as a whale, is perilously close to liquidation as the price of ETH continues to decline. Currently holding approximately 67,000 ETH worth over $100 million, this whale's position remains vulnerable, with a mere $100 drop in ETH's price threatening to trigger an automatic liquidation. This scenario could lead to increased selling pressure in the market, creating a cascading effect that might further depress prices. Moreover, two significant whale positions on the Maker platform are also under threat, with a combined potential liquidation of $238 million if ETH drops by just a few more percentage points. Such liquidations could exacerbate the volatility already felt across the crypto market, where ETH has plummeted by 44% since the beginning of the year. Macro investor Quinn Thompson of Lecker Capital expressed a stark outlook on Ethereum's future as an investment, arguing that its current performance does not justify its valuation. As the cryptocurrency landscape continues to evolve, the interplay between regulatory decisions, macroeconomic factors, and investor sentiment will be crucial in shaping market dynamics. With the Federal Reserve's decisions looming and ongoing geopolitical tensions, traders and investors are advised to remain vigilant. The next few weeks could prove pivotal not only for Bitcoin and Ethereum but for the entire cryptocurrency ecosystem as it navigates this period of uncertainty. In a rapidly evolving cryptocurrency landscape, Bitcoin and other digital assets are bracing for significant market shifts as the Federal Reserve prepares to alter its monetary policy framework. The anticipation is palpable, with investors eyeing a potential $36 trillion price flip next month that could dramatically influence the trajectory of cryptocurrencies. Recent fluctuations in Bitcoin prices, which have dipped back toward the $80,000 mark after peaking near $90,000, underscore the prevailing uncertainty amid inflation concerns and geopolitical tensions ignited by U.S. President Donald Trump's tariff threats. Market analysts are dissecting the implications of these developments, with legendary crypto trader Arthur Hayes suggesting that a pivotal change in the Federal Reserve's approach could catalyze a Bitcoin resurgence. There was a seminal change in Jerome Powell's tone at the last Fed board meeting, Hayes noted during a recent podcast, highlighting the Fed's decision to pause interest rate increases while also scaling back its quantitative tightening efforts amidst an ever-growing U.S. debt that has now surpassed $36 trillion. The Fed's recent stance, which seems to downplay the inflationary effects of tariffs, could provide a conducive environment for cryptocurrencies to thrive. Hayes elaborated on this point, asserting that if Trump imposes tariffs of 50% or 2%, it doesn't matter because we know Powell will continue to provide the easy monetary conditions that we need to have our portfolios go up in fiat dollars. This sentiment resonates with investors who have been watching the market's response to tariff announcements, particularly as Trump's latest tariffs are set to impact goods from major trading partners like Canada, Mexico, and China starting April 2nd. As the crypto community grapples with these macroeconomic factors, some analysts such as Marcus Thielen of 10x Research are cautiously optimistic. He predicts that a combination of Trump's softened tariff stance and a dovish Fed could pave the way for Bitcoin to reclaim its upward momentum. Bitcoin is attempting to form a bottom, Thielen stated, suggesting that the asset might soon rebound towards the $90,000 threshold. In tandem with the macroeconomic landscape, the competitive dynamics within the cryptocurrency ecosystem are also shifting. Notably, while Bitcoin and Ethereum remain dominant forces, newer projects are gaining traction. Codename Apepe, an emerging player in the meme coin arena, is capturing the attention of seasoned traders who predict it might outpace established names like XRP and Solana in 2025. This project promises innovative features powered by AI, including advanced trading signals and automated trading systems aimed at maximizing returns in a volatile market. Simultaneously, Solana continues to establish itself as an attractive platform for decentralized finance DeFi applications, boasting superior transaction speeds and lower fees compared to Ethereum. Recent data indicates that Solana's DeFi applications outperformed Ethereum significantly in terms of revenue generation, raising questions about future investment strategies in the DeFi space. As market participants weigh these developments, a backdrop of volatility and opportunity looms large. The interplay between traditional economic indicators, cryptocurrency market dynamics, and emerging projects will be critical in shaping investment strategies moving forward. For traders and investors alike, the next few weeks promise to be pivotal, with the potential for substantial gains as the Federal Reserve's monetary policy unfolds and new players disrupt the status quo in the crypto market. As we advance into April, the crypto community remains on high alert, ready to respond to whatever shifts the market may bring.